It's time for Stock Picks. Today we're looking across different corners of the global market, in the tech sector with ASML, in global banking with HSBC, and in the mining sector with Kinross Gold. And joining me with his analysis of these counters is Timothy Kiarie from Scope Markets Africa. Timothy, thank you so much for your time today. Let's kick things off with your first pick, that being ASML. Really a winner in the market when you look at the AI ecosystem, as it's the only company that produces the machines that make the chips. And I guess that's the investment case, right?
Yes, thank you so much for having me, and Happy New Year. So yes, ASML is basically a key stock that I'm looking at because of the AI boom. Because the backbone of this particular stock is actually semiconductor and the AI infrastructure backbone. So this makes it, and also the cloud computing, which makes it more enticing as well. But the reason why I look at the underlying bullish sentiments is basically when you look at ASML, it's a near monopoly technology. It has a near monopoly technology mode, which means that it's really dominating in the EUV. Especially in the manufacturing of lithography. Yeah. So I think for me it stands out very well, coupled now with the aspect of AI-driven structural demands.
And how are you making sense of the blowout numbers we've seen over the last week or so versus the group also cutting jobs?
Yeah, when you look at the numbers, that is financial. I was trying to look at the revenue and profitability, and you see, 2025 revenue was about that 2.7 billion euros, and when you look at the net income, it came around 9.6 euro in terms of billion euros, and what you're expecting, like in terms of revenue, you are looking at a projection of around 34 to 39 billion euros. So for me, it stands out very well because the ROE is above 40%, which really positions this particular stock in a very high level that each and every investor would like to look at.
So no concerns around those job cuts?
For the job cuts, anytime a company cuts, maybe does the redundancy, I think for me, I usually look at it in terms of positive side for the investor, because now it cuts on the cost of operations, which means that investors are likely, probably to receive dividends, that is, and also to increase its operational, meaning that the profitability margins are likely to shoot higher.
And are you picking ASML at this moment? Yes, I can tell that you're quite bullish on the counter, more of a long-term pick. But would you say that this is an opportune time to perhaps start buying ASML, considering the tech route that we've seen over the past few days? ASML also caught up in it as we've had some of those software counters really taking a hit.
I will not say that it's really the best moment to buy it right now, but it's something to keep it in the watch list, because even after aligning fundamentals, you have to align technically as well. Yeah.
All right, let's move over to your next pick, and we're in the banking sector with Britain's HSBC. Take us through your analysis of that pick, the investment case there.
Yeah, HSBC actually stands very well for me because it's in the global banking, the trade finance and wealth management sector. And first of all, anytime I'm looking at a stock, I look at the financials. If you look at the quarterly revenue, you're talking about $17.9 billion. The profit after tax is $9.1 billion. And if you look at the customer deposits, they have really increased. Right now, you're talking about $1.7 trillion, almost crossing the reaching the $2 trillion. So also, this is a very nice stock, especially for income-oriented investors, because it really pays good dividends, because the dividend payout ratio right now, as we talk, is about 50%. So, and there is also a lot of active share back, so which is also an added advantage to the investor.
Investors really smiling to the bank if they hold that one.
Yeah,
what have you made of its overhaul, right? In a sense where we are seeing it shift its focus when it comes to future growth from developed markets into developing markets, particularly Asia and the Middle East.
Yeah, we have seen a lot of corporate banking expansion when it comes to this particular company. And these positions, it's very well in terms of international wealth business growth, which is likely because we're already seeing double-digit increasing. And I believe we are likely even, maybe if things continues as the year, we are likely to see even more growth coming into this.
Yeah.
As well, there has been a lot of cost casting as well as which is able to increase the efficiency of the operational efficiency.
And how does it fare against some of its global peers? We can, look at it from the global players and even some of the regional players, because I guess, I think when you are a multinational sort of bank, you're playing with competitors that are just like you, but also the regional ones as well.
I think for me, the reason why it was a very top pick is because of its stable capital strength compared to its peers. So this one stands really out for me.
Okay, let's move over to your last pick. Then you are picking a Canadian miner, Kinross Gold. Are you bullish on this one because of the higher gold prices? I have to ask.
Of course, that is a factor that also added to me picking this particular stock because, but majorly, the company does more of gold mining and the precious metals, and it is scattered across different gold mines like in the US, Brazil, Chile, Canada, and Mauritania as well. So right now, when you talk about gold, of course, this is something that we are looking at in terms of inflation age. It's a safe haven. And right now, we are talking about currency devaluation. We are seeing the rate of inflation really being stubborn globally, not only in the US or wherever, but it's globally. So in terms of protecting cash, I think this really stands out for me.
And in terms of protecting cash, when looking at Kinross, is it a long-term hold? We've seen a lot of traders really trading the gold counters, or gold in particular, on the back of the correction we just saw.
This is not really a long-term stock.
Okay.
It's I would say it's a commodity cycle because it's really backed on how the prices of gold are pushing. Yeah.
And then let's get your views on Kinross's organic growth strategy. Where we're in an environment where we are seeing a lot of M&A activity within the sector. Yes, not necessarily the precious metals, but other industrial metals as well. We're seeing a lot of these gold counters, these PGM counters, as they are cash flush, picking up more of the industrial players, particularly copper.
Yeah, when you look at it in that perspective, I think those are the key major profit drivers here for Kinross is basically the metal sales that has increased.
Okay.
We have seen a lot of metals, especially copper, palladium, as well, the price explode. So which has helped to increase the margins because revenue is able to grow very fast than the production costs.
And is Kinross, I guess, feeling the wrath of a weaker dollar? I can imagine that operating across different geographies could come with some currency headwinds.
I think that is more of a diversification because it's not really concentrated in the US. So I think it's a plus for Kinross.
All right, let's leave it there then, Timothy. Thank you so much for your time and taking us through those three counters. That was Timothy Kiarie from Scope Markets Africa.